Thank you. You are awesome. So, ladies and gentlemen, I have the opportunity to present a wonderful, wonderful person, but I'm just going to give you a little bit about his professional lifestyle, a highlight, sorry. This guy, I'm not going to call his name yet because it's just,
Well,
thank you. But please, we need
please provide.
absolute, Mr. Andy, thank you for muting, but we need you to listen very well because we don't want you to miss anything. So I'm going to tell you a story about an amazing person. We have people on the line. Please let them in. At the age of 26, he was the youngest elected officer in the 100-year history of the New York-based investment bank. Write that down. Age of 26. He was already employed by one of the oldest banks you can think of, investment banks, for over 100 years. It never happened. At the age of 26, if you know these banks, then you know what I'm talking about. Over 6,000 employees work in that bank, operating in 13 different countries around the world. This is just one point. He has served as managing director of institutional sales and fidelity investment companies. You can think of institutional service companies. You can think of all over the world. The institutional sales arm of Fidelity Management and Research, over $4 trillion in investment, over 4 trillion T with a T investment company based in Boston. Number two. Number three, he was the founder, yeah, he still is, anyways, founder and chief executive officer for Trigger Trading, um, an institutional equity trading. I mean, the words are just, boutique based in Princeton, serving loans and short strategies, hedge funds, executive stock transactions, transaction volume over $1 billion per year in New York Stock Exchange and NASDAQ. Guys, it's getting harder and harder every day with him. He leads a capital rise, capital equity hedge rising quantity, whatever, based in Princeton, that employs a multi-factor factor mean reservation global strategic arbitrage strategies. This funds was led by investment professionals with PhDs from Princeton and from Stanford University as well. So, what is this just saying? I mean, this guy has done so much in his wonderful lifetime that I can give you so much pedigree. He serves as executive officer for NASDAQ listed industrial non-technological companies. In the role, he raised over $100 million in capital equity from tier one institutional investors in the US alone, multi-billion-dollar family offices in Dubai. He has grown so many hedge funds, so many companies from $35 million to over $1 billion you can ever think of. This is incredible. He was the first and only American to serve in, and that is where I was getting at. And that's where we're gonna go today. He's the first and the only American to serve on the Leadership Council of Indian Energy Storage Alliance. He is also the first to come to my podcast. Ah, wonderful. With this pedigree. Guys, I can go on and on and on, but finally, he has arrived all over the world and has lived and worked in both India, China, Dubai, United States, and now he is helping us to push one of the biggest and most fantastic businesses in the world, mining ways. I have nothing more to say but to say welcome, welcome Mr. C. Robert Pedraza to our call. Thank you, sir, for gracing us, for being here, for really taking the time off your busy schedule to come say hi to this community. Welcome, sir.
Mr. Richmond, thank you very much for your warm welcome. And I'm privileged to be here speaking to your community and the mining race communities and Iconex communities around the world. It's a very exciting time in history, and to be part of this and contributing it, especially through the mining race Iconex relationship, I'm grateful for, and again, a privilege. So it's great to be here. So
Awesome.
take it
Awesome.
away.
Awesome.
Let's start the podcast.
Okay, good. Guys, I don't know about you. I hope everybody had coffee, tea, whatever you need to drink. Is a little bit cold outside here today, but I can tell you all something. Honestly speaking, I got goosebumps because just knowing that I'm sitting here with my brother and I'm about to ask him some questions is like, oh God, I just won that $1 million. I don't know about y'all, but yeah, I feel that way. So let's go. I have some questions that have been sent to me from all over the world as well, from every like-minded people who want to know about you, sir, and ask some questions. And one of them, I will start by saying, number one, over the course of 40 years, you have had wonderful, significant capital market experiences inside some of the world's biggest, most sophisticated investment banks, right? Good.
Yes.
So the question here is, how do you know? How do you know what to look for in a decentralized and centralized finances, which includes Bitcoin? How? How are we going to distinguish? Help us out.
So let's take a step back and very briefly, and let's understand how capitalism has evolved. So I think here in the US, one of the milestones is Adam Smith wrote a book entitled Wealth of Nations, and it was published in 1776, theorizing the fundamental principles of capitalism, which were solidified and validated through the Industrial Revolution in the 18th century. And capitalism is the dominant system primarily in the world today, and certainly in the United States. And that capitalistic system evolved within a centralized framework, which we refer to as centralized finance. So let's first understand what centralized finance is before we talk about decentralized finance. And let's compare and contrast the two. And I'm aiming this at a broad cross-section of skill levels, because you have people who are beginners all the way to extremely sophisticated. So be patient with me at both ends of the spectrum here. So first, let's understand what centralized finance means. Okay, that refers to financial services and platforms that are provided by centralized entities, such as financial institutions, banks, or exchanges. And the fact that these services or platforms providers are controlled by a single entity or an organization, which makes them centralized. So let me give you an example. Richmond, you and I, if you had an account at Merrill Lynch, right, with some shares,
Right.
and I had an account at Charles Schwab, how would you and I transact business? Well, we wouldn't. You and I would never see each other. What I would do is I would log into Charles Schwab, and let's say I wanted to buy 10 shares of Amazon.com, which is a famous company I think we're all familiar with.
Right.
So I would then go to Charles Schwab platform. You'd go to Merrill Lynch. You woke up and decided, I'm going to sell 10 shares. I woke up and decided, I'm going to buy 10 shares. So those orders would then be input into an organization, you, Merrill, me, Charles Schwab. Those signals would then be sent electronically into the New York Stock Exchange. And that's where you and I would meet. But you and I had to go through each an individual brokerage firm and the New York Stock Exchange platform. On top of that, the New York Stock Exchange is regulated by an assortment of government authorities, including, and so are we, the Securities and Exchange Commission, FINRA, etc. So
Mm,
that is an example of centralized. Okay, we're
mm,
working through these platforms. Decentralized is a financial system that's built on blockchain technology that
right,
gives us the ability to lend, trade, and invest without all these intermediaries. So now, when you're putting in an order for Bitcoin, if you're selling and I'm buying, I'm not calling Charles Schwab. You're not calling Merrill Lynch. The orders are not getting routed through the New York Stock Exchange, which is oversight by the Securities and Exchange Commission. You and I are going what's called peer to peer
right.
on the blockchain, which is an immutable ledger that records all these transactions. Okay. And another element of the blockchain are smart contracts that is executing code that automatically enforces the terms and conditions that have been previously established. And then lastly, in this peer-to-peer transaction that you and I did in the Bitcoin example, you and I are going direct. It's completely peer-to-peer. So that's the difference between centralized and decentralized. And within the decentralized system, Bitcoin has become, well, 60% of the market capitalization of all cryptocurrencies. So if you add up the value of all the different crypto projects, cryptocurrency projects and tokens, Bitcoin is 60% of that, which is
Wow.
rather significant. So I see, looking out into the future, Bitcoin continuing to be the primary token of as store of value, and I see continued growth of decentralization. And I refer to DeFi, decentralized finance, as really as capitalism 2.0.
Wow. I was just about to ask you that question, actually. Just because you just laid it all out. For somebody that is just coming in here and just thinking about, okay, good, I'm going to put my money in the bank. Watch out, because you're dealing on centralized platform that goes through the whole way. I saw a video. I just sidetrack. I saw a video last week of a guy. I don't know if y'all saw this. A guy in the UK that was trying to get his money to buy a present for his son from a bank called Santander Bank. And he was trying to buy this present for his son. And the bank wouldn't give it. The bank had to ask him a question: why do you need the money? I mean, I was sitting down and I was like, it's my money. Why do I have to tell you what I need my money for?
Right.
So from your vintage point, what is driving the world to decentralized finance or DeFi?
Yeah.
What is it? This accelerating of interest and the investment into Bitcoin. What can you say is driving the whole world to this place?
That's an excellent question. So we're seeing a significant migration and booming and accelerating migration from capitalism 1.0, which is centralized, to capitalism 2.0. And I think the biggest driver to that, from my perspective, is let's understand what capitalism 1.0 is based on. A major element of capitalism 1.0 is the US dollar, because the US dollar is the world's reserve currency and it plays a significant role in centralized finance. Let me give you an example. Let's say the Japanese want to buy oil from Saudi Arabia. The Saudis do not accept Japanese yen. The Japanese have to convert yen into dollars and then hand the Saudis US dollars. That makes it the world's reserve currency. So the dollar is an extremely important and integral element to global finance 1.0. Now, the strength of the dollar is really based, in my opinion, on two things. Okay, the strength of the US national economic system, and two, the ability of our country to project military power around the world to protect our sovereignty. So let me expand on both, and I'm going to go to the easy one first, which is the military power. So we're all familiar with the Russia-Ukraine conflict, right? And let's stay out of this politically, whose fault it was and all that, okay? But it used to be, up until the day Russia invaded Ukraine and crossed its borders, it would take Ukrainian hryvnia, as they're called, right? That's the name of the currency. So with
Yes.
8 hryvnia, you could buy $1. The
True.
second the Russians invaded Ukraine, the hryvnia devalued. And within a short period of time, you now had to get 32 hryvnia to buy you $1, which represents what? An amazing devaluation of the Ukrainian dollar.
So
Now,
true.
if the Russians had run across the country and taken over the whole country, guess what they do the next day? They sit there and say, the hryvnia no longer works. It's over. Guess what? All that money in the bank goes to zero. So
Hmm.
military power is incredibly important. The second thing is of the US dollar is the perceived strength of our economic system. Now, I'm going to give everybody on the call here, please write these statistics down because this is incredibly important. And this is a major point of my response to Richmond's question. The US government published on January 16th, 2024, Jan 16th, 2024, the US government published its annual financial report, which was reflective of the 2024 year-end results, right? So in January, the following, 2 weeks later, you publish, just like any other corporation, you publish your annual report. Okay, what happened last year? This report is on treasury.gov, and it's signed by the Secretary of Treasury, which at the time on January 16th was Janet Yellen under the Biden administration. And a few days later, Trump took over and he assigned
Yo, perdón, me bajé a ver un Zoom, Perdón.
a new a new Treasury Secretary. So here's what's in the report in the summary. Now it's a 254-page report, but I'm only going to talk about a couple of key facts. Number one, the report in writing states that through the end of the century, right? We're in 2025, 75 more years through the end of the century. The US government is going to spend 72 trillion more on a present value basis than it's going to take in. 72 trillion more. But here's the thing, they call it present value, which while mathematically is correct, the reality of it is if I have $72 trillion today, over the next 75 years, it would grow to what? 400 to 500 trillion. So what they're really saying is in future dollars, now let's take it back, we're going to spend 400 to 500 trillion more, the US government, than it takes in taxes on general expenses.
Oh my God.
Now, everyone's worried about the $37 trillion in debt that we have as a nation, but 400 to 500 trillion in deficit spending through the next 75 years is far greater than $37 trillion balance that we have today in debt. Now, there's one other key point in this report. That 72 trillion present value, which really future value is 400 to 500 trillion, does not include the deficit spending to finance Social Security, our nation's retirement system, supplemental retirement system, and Medicare, which is the major hospitalization for US citizens. And that is 78 trillion in present value. So while it is 78 trillion, and that is an accurate mathematical number, it's deceptive because in future dollars, it's another 400 to 500 trillion. So what is this report telling us? What this report is telling us is that the US government is going to spend 800 to 1,000 trillion more than it takes in through the end of the century, the next 75 years. So what is that really doing? What am I describing? Okay. What I'm describing is the only way the US government can do this is by printing more money. And if you print more money, what do? You cause inflation. And what's the impact of that? The devaluation of the US dollar. Because you have to print more fiat currency. And fiat means that it's not backed by gold because we got off the gold standard. Nixon did that in the early 70s. So what we have is, what I'm describing is not the ongoing devaluation of the dollar. I'm describing what is an inevitable existential threat to the existence and value of the US dollar. And if the US dollar goes down as the world's reserve currency, that will have a seismic and rippling effect globally. So now back to Richmond's question. How does this relate to Bitcoin? Because
Mm.
now everybody, and I'll talk about this a little bit more, everybody is now buying Bitcoin as a hedge against the destruction and devaluation of the US dollar or your own native currencies wherever it is. Rupees in India, yen in Japan, rubles in Russia, hryvnia in Ukraine, euros in Europe, pesos around in Latin America. Everyone is now going from capitalism 1.0 based on the US dollar to capitalism 2.0, which is based on the blockchain and Bitcoin being perceived and becoming the preferred store of value. And Bitcoin will skyrocket as the dollar collapses. That's my thesis.
Wonderful, wonderful. Before I just dive and dissect into this, ladies and gentlemen, welcome to this um, show. We always have the Super Testimonial Sunday. But before I go on, I really, really want to give our upline that is here, Super Vice President is in the house, Mr. Karosh. Martin is here. He's always here, very, very supportive and always guiding us as we go by every Sunday. So thank you for being here. And for everybody else that is listening to this, ladies and gentlemen, you are listening to facts. And everything you hear today here is what is out there in the public space. So it's not new. But sorry, you painted a very dark, bleak picture about the United States dollars right now. The world's reserve currency. What is the most sophisticated investment managers in financial centers around the world, such as New York, London, Abu Dhabi, and Beijing, have to do going through these responses that you just painted right now? What will they then do? Because this is scary when we hear
Yeah,
about
it
this.
is. It's frightening. And I think that the discussion has, the outlook, everyone talks about the current national debt of the US government, which comes in really one broad form. It's called government debt, which really comes in short term, which is treasury bills, 0 to 2 years, treasury notes, which are 2 to 5 years, and greater than 5 years is called treasury bonds. So we have IOUs right now of about $37 trillion. Okay. And we have to service that debt, which is over $1 trillion a year. And the statistics I pointed out didn't even include the 37 trillion that I just mentioned. Okay. So this is a very, very frightening situation. So what sophisticated investors are now doing is they have a responsibility to do what? Hedge.
Yeah.
So everyone here, I'm sure, a lot of people here own a home. And whether you own one now or own before, at some point you probably owned a home. So how do you hedge against the destruction of your house? Well, you buy homeowners insurance, right? And depending upon where you live, it costs either a little bit or a lot. And if it costs more, it's because the risk is greater. So, for example, down in Florida, homeowners insurance is pretty expensive. Why? Because there's hurricanes, and the hurricanes come through, they destroy the house, and the insurance companies have to have the money and at the same time make a profit. So you hedge, and if you live, let's say, like where I live, where there's no hurricanes, you still could have a flood. You could still your house could burn down from some faulty wiring, right? Some unfortunate event. Maybe a plane crashes and comes into my roof. So what people do is they insure and they hedge against risk. So
Right.
what's everyone doing to respond to Richmond's question? They're creating sovereign wealth funds and either creating digital wealth funds or adding to their existing sovereign wealth funds through the acquisition of gold and Bitcoin. So China, UK, US are now increasing their purchases of Bitcoin as countries. So those are called sovereign wealth funds, and they're now buying an increasing amount of Bitcoin in their treasury accounts, which are referred to as portfolios that belong to a government as their sovereign wealth fund. Corporations are doing the same thing. So you have a growing number of public companies around the world, not just the United States, that now are taking a portion of their cash position and buying Bitcoin. Individual investors, ultra high net worth, family offices. These are folks that have anywhere from 500 million to a billion to as much as $200 billion or more in individual wealth, are now diversifying and buying Bitcoin and gold. And like I want to now draw a distinction between the two because gold in the US, I don't know how it works in other countries, but at one point, the United States government confiscated everyone's gold holdings. So they ran around and said, look, you got to turn over your gold to us. So the advantage of digital Bitcoin is, first of all, no one knows you have it. Two, it's in a wallet, right? Trust wallet. And it can be fractionalized. So if you have a gold bar, if you're fortunate to have a gold bar, even a small one, if it was the size of a brick, boy, you'd be pretty wealthy today at these prices, right? But how do you fractionalize that? Do I chip a little bit off with a pocket knife and then go and buy eggs with it? Right? So one of the difficulties of gold is that it can't be fractionalized. It has been, confiscated in our history. And, then you have the safety issue around, where do you store it physically? So all these are completely removed, these concerns with Bitcoin. So everybody, and I'll give you an example here that I think is kind of interesting. Harvard University, which is one of the world's famous universities, no different than Oxford in England, National Singapore University in Singapore, which is an elite school, Tsinghua in China, IIT in India. These are the elite universities around the world. Well, Harvard has an endowment. Okay, and the endowment is basically like an investment portfolio. And they use the interest, dividends, and gains off that portfolio to subsidize the tuition. Because while the tuition is high at these universities, it doesn't pay the total cost of the education. So they have these portfolios whose gains and interest, they take annually a little bit of that, and they help subsidize the operating costs of the university. Well, Harvard now owns $442 million worth of the BlackRock IBIT exchange traded fund, which only owns spot Bitcoin. And that $442 million position is greater than the position that they have in NVIDIA and Amazon.com, which I think speaks to the belief that Harvard Endowment, which is one of the most sophisticated investors in the world and successful investors by track record, they believe in Bitcoin. So everyone is now moving, starting to move or is continuing to move and scaling into Bitcoin to hedge against the devaluation of currencies and potential collapse of currencies around the world, including the US dollar.
This is absolutely, this is so, when you hear this stuff, you'll be like, okay, I relate to what you're saying, Rob. I understand what you're saying. Good. I live in this part of the world. Good. I started buying some Bitcoin and all of them, but I just experienced a fantastic thing that happened sometime this year where we had the all-time high of Bitcoin, right? Bitcoin hit just about $126,000. And all of a sudden, we're approaching the end of the year, right?
Yep.
And we're struggling to cross the $90,000 mark.
Right.
Should I be worried?
So I think the fluctuation is an interesting issue, right? And mathematically, it's really referred to as volatility.
Right.
So as you know, as you introduced me, I have significant capital markets experience. I do not consider myself an expert in crypto, though I do certainly have a fundamental understanding, and I would suggest intermediate understanding. The folks at Mining Race are absolute world-class experts. Okay. But I have my view, I see it through this capital market lens. So I'm going to draw an analogy. First of all, let's establish what price movement is. Sharp price movements are referred to as volatility. So interestingly, if anyone here bought a stock at $10 and within 2 months it went to $20, you've doubled your money, right? And everyone would say the exact same thing. I'm making money, it's gone up. So it went from $10 a share to $20 a share. It's gone up. But if you bought it at $20 a share and now it's $10 a share, now you introduce the V word and you say, oh boy, this is really volatile.
Right.
Well, the reality of it is that it was volatile on the way up and it was volatile on the way down because volatility is a mathematical measure and mathematics is agnostic. There's no
Right.
emotion. It's a positive emotion when it goes up from 10 to 20. And it's this, oh my God, it's volatile when it goes from 20 to 10. The reality of it is it was volatile in both directions. And we need volatility. And volatility is good. But you need to understand two things. Number one, you have to have fundamental belief in the correct investment thesis long term so that you could ignore the short-term fluctuations associated with volatility. Okay? So you have to have a fundamental thesis and you have to be able to ride out and buy and hold for the long term. And then
Exactly.
these short-term swings or volatility doesn't impact you.
Yeah.
Okay? So let's give an example. I'm going to give you hopefully the exact numbers. So everyone knows. So now let's look at this through the analogy of the centralized system, the capital markets background that I have. So everyone remembers the dot-com era of the
Right.
late 90s. I mean, it was like garbage.com, chairs.com, anything with .com, it went up. Now,
Chick-fil-A.com.
yeah,
Yeah.
right. I mean, there was even bathtowels.com, dogfood.com. Like, it was
Yeah.
pretty crazy. Okay. Now, amidst all those companies, first of all, the valuations got crazy. They got exuberant. And the volatility spiked a lot of these companies up. Now, were there legitimate business models, worthwhile and valid business models amidst all of these crazy companies with .com at the end of it? Absolutely. Now, it was a small minority, okay, of those, but there were certainly some good business models. I'll give you an example. Priceline.com. Remember Priceline.com?
Mhm.
They were the ones that said, so here in the US, and I'm sure it's the same way around, and I've lived in India and China for a year respectively at each of these places, right? And traveled all over the world extensively. But I used to have to go to, when I was a little kid, and I'm 64 years old, by the way, when I was like 15 years old, I remember walking past Main Street of whatever little village I lived in, and there's always like two or three ladies behind a glass window, behind a desk, and there's like an older couple, and they're planning out like a cruise, right? So you'd buy plane tickets, cruises, rental cars. It was all done sort of face to face, and you had to go
Right.
through a travel agent,
Right.
right? So somebody came up with the idea of Priceline.com and said, look, this is highly inefficient. You should just be able to go on your computer and you can see everything in real quick. You click on airlines, you can pick your hotel, you can pick your rental car, you can buy theater tickets, you can organize your whole trip in 15 minutes and pay for it online. And it obviously visionary. So Priceline.com on a risk adjusted basis went public in March of 99, believe it was, for $96 a share. Everybody write this down. $96 a share on a split adjusted basis. Okay? $96 a share, split adjusted basis. 30 days later, the stock was at $974. Could you imagine? You made 10 times your money. If you'd have put $100,000 in that, you'd have $1,000,000 a year later. I mean, a month later. Literally. 1 month later. Okay. Then the dot-com era did what? Collapsed. So it was just too frothy. You had dogfood.com, beachchairs.com. Like, this got crazy. And everyone recognized it, and everyone headed for the door and was hitting the sell button at the same time. Well, guess what? The market crashed. Okay.
Mm.
Now, Priceline.com on a split adjusted basis, a little over 2.5 years later, went to $6 a share,
No way.
which means you lost 99% of your money.
Jesus.
Okay. Now, hold on though, because 2 points here to make. Now, Priceline.com changed its name to Bookings.com, and they changed the symbol, but it's still Priceline.com. Today, Priceline.com is over, I think it's $4,800 a share, which means what? Had you bought it at the peak, if you bought it at IPO, 96 went to 4,800. If you bought it at the peak before the crash at 974, you'd still make 5 times your money 25 years later, which is a 6% annualized return, which is better than the bank. if you endured and if you were smart, when it hit $6 a share, if you really believed in Priceline.com, what did you do? You bought more. And $6.60 is now at 4,800, which means you made over 700 times your money. So it goes back to Bitcoin. If your investment thesis and you really believed in the business model and the vision of Priceline.com at $6.60, you'd have bought more. And you'd have ignored the noise, because short-term emotion and noise is what drives a stock or a cryptocurrency short-term. It's all emotional. It's all perception. The fundamental intrinsic value appears longer term, the sustainable value. And that's exactly what's happening with Bitcoin. So I'm not at all concerned. It could go down to 50,000. And this is where mining actually works in your favor, because now you're dollar cost averaging on the way down, which is actually the smartest thing you can do. Because what did I say? When Priceline.com went from $9.74 a month after its IPO, 2.5 years later, it's at $6.60. What did I say you should do? Buy more. So what Bitcoin and what you're doing is you're averaging down your cost, which is, so if you do that systematically, that's known as dollar cost averaging. And Mining Race enables you to do that in one of their programs when you buy one of the mining machines. So, I think, to look at volatility, you really need to understand it. Let's remove the emotion. It's agnostic. It's actually healthy. And it gives you an opportunity to average down. And you want volatility, because nobody here buying Bitcoin at 90,000, hoping it goes to 100,000 10 years from now. True. So guess what we need? We need volatility.
Awesome. One question I get most of the time is, why don't they teach this stuff in the school? Like, what you just said right now, I am one of those guys. For people who know me, actually, yeah, I hate Bitcoin was the way I always spoke back in the days, because I started off owning 300 Bitcoins when they were just 0.007 cents. And what happened? It was a gift. I don't know what it was. I just took it, and so I lost 300 Bitcoin just like that. And it took me 2016, 2017 when it hit me and I saw it, and I was like, what? $15,000 for one Bitcoin? How come? And I had this stuff. But, today we're getting back to where we are. So, as we're winding down this discussion right now, what will be your price prediction for Bitcoin looking forward? The way it's going right now, what would you say?
So look, here's my thesis. And it's really easy to just do this, like, right, and just pick a number out of the air, right? Like, what's the temperature? Where's the wind blowing? I look at it like this. I think decentralized finance is capitalism 2.0, because what it's doing is it's eliminating the centralization, inefficiencies, regulation, and it's really it's more an advanced form of capitalism. Bitcoin is central, I believe, as the perceived store of value, just like the US dollar is the world's reserve currency. I believe Bitcoin plays that role as a store of value within this capitalism 2.0 that I see. So let's write down a couple more facts here. Everybody take note, because my investment thesis is based on global macro kind of perspective. If you look at the value of global equities around the world, okay, so what are global equities? You're talking about adding up the market capitalization of everybody in the New York Stock Exchange, the London Stock Exchange, the FTSE, the Tokyo Stock Exchange. Public equities are somewhere around $150 trillion in value.
Sure.
150 trillion. If you look at all corporate debt around the world, it's close to the same number. Okay? Very close to the same number. Now, what's happening is what did I say? Governments, foundations, endowments like Harvard's endowments, Chinese government, American government, UK government buying Bitcoin. So they're doing it as a hedge. Now, when you buy a hedge, it has to be proportionate to what your perceived risk is, right? So if you own $1 million house, what do? You buy $1 million worth of homeowners insurance. You don't buy half a million, you buy $1 million. Okay.
Definitely.
So now you're hedging. So now you have to build a hedge around all your other holdings. So the size of your hedge is really based on the value of these centralized assets. So if public equities is at 150 trillion, global debt, institutional debt is at close to 150 trillion. That means that in my mind, the market opportunity for all crypto assets at a minimum is $100 trillion. Now, currently, Bitcoin is 60% of the capitalization of all cryptocurrencies, meaning if you add up the value of all cryptocurrencies, it's approximately, it fluctuates obviously with volatility, 2.5 to 3 trillion. Bitcoin 60% of that. If Bitcoin's percentage falls to 40% and all cryptocurrencies go to 100 trillion, which it could because global equities are 150, debt is at almost 150, real estate's over 600 trillion. If crypto goes to 100 trillion, that means, and at 40% of that value, Bitcoin would be at $1 million a coin. So to answer your question, and I think it gets there within 5 to 7 years at $1 million.
That is a bold move, sir. That is a bold move. Yeah. I mean, with everything you've given us this evening, I respect that. Um, Before I take my last question that I want to ask you is, tomorrow starts one of the biggest events ever in the UAE, and for Bitcoins, like Christmas for Bitcoin, where all the big giants come together for the next 2 days and speak into power what Bitcoin holds for us. What would you say about the Bitcoin mania? And to tie it up to my last question, because it's going to be a lengthy answer,
Yep.
why do you support mining rates? And what would you tell everybody on this call to do when it comes to mining rates? Your call, sir.
So, excellent question. First of all, United Arab Emirates, let's talk about UAE first off, okay? United Arab Emirates, there's 7 emirates that comprise the United Arab Emirates. So the emirates are Abu Dhabi is the largest, I think, by wealth. Dubai, very close second with global wealth. Abu Dhabi is the capital of the United Arab Emirates. And of course, we're all familiar. And Abu Dhabi doesn't get a lot of publicity, but trust me, that's where all the oil and gas is, and that's where the government offices are, and that's where some of the richest families, Emiratis in the world are, on top of
Right.
Dubai. The third
Right.
one is Sharjah, and then there's 4 others that are sort of gaining traction because now their populations are starting to increase, okay, and the business activity. But the United Arab Emirates is an amazing place because there is something very unique that's going on there that's attracting more billionaires than any other place in the world. So the United Arab Emirates, in Dubai, there's something called the Dubai Investment Financial Center. No, Dubai International Financial Center, DIFC. And I've been to Dubai and UAE half a dozen times and was recently here and stayed over 100 days here on my last trip, I think in the last 12 months. And the DIFC has what's called a family office, family wealth, association, which you have to apply for. You probably have to have a minimum net worth, absolute minimum as a family. I mean, absolute minimum, $500 million, and the preferred amount is $1 billion or more. And at the end of 2024, they had 750 families that qualified, and they were projecting that in 2025, that number was going to double because more billionaires are headed there than any other place in the world because of the following reasons. Number one, crime is almost non-existent. Because let me tell you something. Justice is swift and harsh in
Oh
that
yeah.
country.
Oh yeah.
Swift, like if you raise your voice at, let's say you check into the Marriott and they have to, you got to wait 1 hour to get your room, and you start acting like a crazy American on Instagram, okay? Because Americans are starting to get all crazy. Let me tell you something. You either pipe down really quick, or they will escort you. The police will escort you, and you say you got to stay somewhere else. And God forbid you get a little crazier than that, they'll just put you on a plane and send you home. It's that simple.
True.
And if you get caught with drugs, you're getting a life, you're going to spend 30 years in jail. Like, that's it. So crime is non-existent. They have an incredibly favorable tax regime that's virtually non-existent. Okay. In other words, there's no income tax, no estate tax. They are so pro-business friendly, it is unbelievable. Okay.
Mm.
It isn't, let me tell you this, it is a dictatorship, but it's a benevolent dictator. In other words, the rulers of this country wake up every day and say, how can we make the lives of our citizens and our guests better? So
Okay.
that's what's called a benevolent dictator. We're all familiar with historical non-benevolent dictators. Stalin, Hitler, Pol Pot, pick one, right?
Yeah.
These guys wake up, how do I benefit my citizens and my people and my country and make this a better place than it was yesterday? That's what they do every day. So it's an incredible country. Secondly, the culture there is incredibly respectful, and there's such a focus on family reputation. Their reputational capital, they've protected for centuries. They are proud about their great, 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 great grandfather and what he did to establish the country. These people do not get silly, do not get drunk, and then where this all culminates is their sense of financial responsibility and respect for money is the highest in the world. So you are dealing with, so that's Dubai, that's UAE. Now let's go over to mining rights, okay? One of the largest shareholders of the holding company is one of the sons of Sheikh Mo, who affectionately
Wow.
shown as Sheikh Mo, Sheikh Maktoum,
Yeah.
who is the ruler of Dubai and the visionary behind Dubai. That man stood in what appeared like, looked around, it was, 50 years ago, there was nothing but sand. And he dredged and brought in the water, built the canals. That whole vision was led and materialized under his leadership. So their family reputation can't be touched. So by virtue of the fact that one of Maktoum's sons is a 20% shareholder in the mothership, as they refer to it, right? The corporate holding company, that ensures the financial integrity of this endeavor. Because these people will do nothing that could potentially infringe on their reputational capital. And they view that, and they're worried about it, how the world sees them.
Mm.
So I think I'm behind this for the following reasons. Number one, this is backed with a 20% equity stake, founding stake by Sheikh Mo's son. It's fully registered in Dubai on the mainland. It's not off, in the free zone. And I'm going to tell everybody here, and if I offend anyone, I'm sorry, but if you ever see these Belarusians driving around Lambos in the free zone, offering you we're going to start our own little token deal, grab your money and run. Because that's the reality of it. These are the Emiratis who have the highest respect for money in the world, the highest level of discipline, the highest level of, concern about family and relationship capital. And the ruler and his son the ruler's son is integrally involved in this project. Secondly, I believe mining actually takes advantage of the price volatility through the dollar cost averaging mechanism. And more importantly, you're buying virgin Bitcoin. Now, what does that mean? That means it's never been sold or traded before, which means no one knows you have it. We're all reading about these stories where, some multimillionaire guy worth a couple, $300-400 million, two people busting in his house over there in the fanciest part of London or Croatia, wherever it might be, and they hold a gun to his head and a knife to the wife's throat and say, what are your 12 keywords?
Mm.
Well, if you get involved in Bitcoin mining, no one but you knows how much you have. And from a safety perspective, that's incredibly important. So I really like and I also fundamentally, you have to look at all these projects. And let me just point out something here. Apparently there's I read some statistic. There's apparently 20 to 22,000, new crypto projects every year. Well, 99% of these are failing. So you might as well just stick with the Amazon.com, the General Electric, the Berkshire Hathaway, the IBMs, the Microsofts, the Amazons of the world, the Nvidias, and get involved in Bitcoin. And I think the best way is Bitcoin mining. And that's what Mining Race inside the UAE, where it's based, has to offer. It has all the benefits, removes all the risks, with the exception of the price fluctuation, which I said is good. And I think it's imperfect. And that's all those reasons are why I've decided, I'm not a paid spokesman here. Let me be clear to everybody here. It's an unpaid role, but I like contributing to this and I like being involved because I'm learning also about crypto, more detail on the other side. So that's why I back this.
In just 1 minute, because we have just 1 minute left.
Yes.
If you have the opportunity to tell everybody on this call right now, for the future, what would you say to them?
I think you ask yourself one question and everyone one question. Write this question down. What are you doing today? I see Sabine writing down, so I'm going to say it again. Good for you, Sabine. What are you doing today to protect your currency denominated assets? So if you're in the US, you'd say dollar denominated. If you're in Tokyo, you'd say yen. If you're in India, you'd say rupees, right? What are you doing today to protect your currency denominated assets, fill in the blank, which include stocks, bonds, real estate, against the continued devaluation of currencies around the world and the potential collapse of the US dollar, which is going to take everyone with it? What are you doing? It's the same question if I go to Richmond. Richmond, you live in a house. What are you doing to protect against the destruction of the house? Robert, I have homeowners insurance. Richmond, you own a car. What do you do? I have auto insurance. So what is everyone doing? So then what is the recommendation? Truthfully, everyone here, along with everyone in your community, because they don't have an answer. 96% of the people are going to give you the following answer. First of all, they'll be like, what's the question? And then once you re-explain it, they're going to say, I'm not doing anything. Well, that'd be like owning a house without homeowners insurance, owning a car without car insurance. So everyone should take 5 to 10% of their assets, literally, the value of their home, the value of their stocks. Let's say it's $3 million. Let's say it's $300,000. Take 10% of that and think about buying Bitcoin. And I think the best way to enter into Bitcoin is through Bitcoin mining. To protect against what? The continued devaluation of currencies around the world and the potential collapse of the US dollar, which is going to take everybody with it. That's what I would say, Richmond.
Guys, this is wealth of nuggets, and I don't even know what to say anymore. But Rob, I just want to thank you from the bottom of our heart. For everybody, please show love to this man. He is an asset to our company.
Here's what I'm going to ask. Open up the chat box. Richmond, open up the chat box.
It's open.
Okay, I want everyone on this call. There's 41 people here. Here's what I'd like to see. In the American grading system, A was the highest, B is second highest, C, and then there's F. So if you think I was good, give me an A. If I was okay, give me a B. If I wasn't so good, give me a C. And if I was bad, give me an F. Let's see the grades right now. Everybody, That's all I ask from you.
Oh, wow. Now you can see it there. I wouldn't even say a word anymore. Hey, listen, Rob is he's a friend of the family, and this is a guy that is very passionate with what he does. If many of you missed who this person is, the introduction, you can have it. I'll send it to you. But I'll tell you, if you need a great person to be able to rile your people up, this is a wonderful man. I enjoy listening to him and to everybody else. But having said that, I just want to thank you, Wealth Generators, our team. We thank you for being here. We would definitely want you to come back. But wonderful Merry Christmas, sir. Enjoy it.
Thank you,
You
Richard.
know, and hope to see you guys very soon. Ladies and gentlemen, on the chat, we also posted the Zoom that is about to come up. Our senior vice president is having a call in less than 5 minutes. Please jump in, co-host. We post it again, but please show mad love to our brother here, our good friend, and just thank him because he is awesome. He is, I don't even know what to say. I think I'm just going to go watch this recording and watch it and watch it and watch it. Probably start making money off of it. Why not? He just gave us the answer to everything. What would I be protecting my asset from? So this is an asset we have. Thank you, sir, for being here. And we wish to see you again in the shortest time. You have a fantastic.
Thank you to everyone. Thank you.
Thank you, sir. All right, guys, you have a fantastic one. See you guys in the next call coming up in the next 3 minutes. Cheers, everybody. Bye-bye.